Speaking of kind of gas prices, the price of oil is in focus today. It's been moving lower since the morning because the reports came out that Israel would not be targeting nuclear sites or oil facilities in Iran. Price went down. Doug Flynn joins us now from Flynn Zito Capital Management. Give us the perspective on this, Doug, because that was, I guess, kind of what they call a risk premium was kind of built in here the last few weeks. And if they're not going after the oil facilities, it goes away.
Yeah, definitely. I mean, oil started the month at like $66 and it ran all the way up to $77 a week later, which was a week ago. And now we're pushing back down to 70. So just from the beginning of the month, it's only up a few dollars, but that range has been quite wild. Basically on this, how much damage was there going to do, disrupt the supply? That's going to drive up prices. Now, if they're not going to attack it, things can settle down and take a more normal pace, which is what you normally have in the fall. You have prices come down normally. They're still a little bit up with the uncertainty, but not as much as they were if they were going to launch an attack.
Yeah, it was a quick 5% sell-off this morning. When I saw it, it ended up being down a little less than 4% on the day. Now, let me talk about the other big business headline, or one of them today, was all the big banks and their earnings. For example, Goldman Sachs beat expectations. Bank of America, Citigroup, their profit fell compared to last year, but not as much as feared. So how are the banks doing?
Yeah, the banks are really interesting. What happened here was that expectations, for a whole host of reasons, were really, really low. In fact, so low that just coming in with okay or slightly above earnings made it sound like this was the greatest earnings report in the history of earnings reports. And so part of it is on the back of that, the death of the American consumer was greatly exaggerated here. They thought that, they were going to implode with the job market and with layoffs. And so built in a lot of debt problems, and the American consumer hung in there. And so because they paid their bills and the debt-to-income ratio is still pretty good, banks had better earnings, and they also made money on other things, and they stand to make a lot more money when rates come down on mortgages, which no one has really done to any large degree. So they're sitting pretty well, and the valuations on bank stocks and financial stocks are really low relative to the market, and about half what technology is. So there's some opportunities there.
We're going to run after this with the bell and the close of trading on Wall Street, but a quick comment on Walgreens, the pharmacy chain, because they also, speaking of earnings, good earnings, but they're cutting a bunch of jobs. What's going on?
Yeah, that was really it. They did a massive cost-cutting measure to get themselves sort of right-sized and on the right path. They still lost a lot of money, but cutting that made it better than expected, and they're going to close a lot of stores, and they're just going to get back down to their roots, which is just pharmacy, retail, none of all this other stuff they got into, including investments in China and all that. They're retrenching everything, pulling it all back in, get back to their roots, shedding a lot of debt. They got to right size, and then maybe they could turn it around. So the stock's down about 65% year to date. Right. And we'll see where it goes from here.
We will indeed. Thank you, sir. I was looking at the monitor. I was about to say nice tie because I thought it was the same as mine, but it's just a little bit different. But it is a nice tie. Thank you, Doug. We'll talk to you again soon. Doug Flynn there, closing.